in the town that I love best. Talk Memphis, I wish you would. Talk Memphis.
Dan, let's talk about today. We're going to dive right into this like we do every show. Local banks and why and how we use them. So I've been a licensed agent for 17 years now. I've never used, I'm not going to say never. We don't use absolutes on the show, do we, Dan?
Absolutes.
I very rarely.
Almost never.
Yeah. Yeah. I almost, you like that? I almost just said what you did. I almost never.
Almost never.
I very rarely had a client use a local bank when I was doing and selling residential real estate. Just very rarely. I mean, they typically go to Wells Fargo or iBank
First
with Ludi
Tennessee.
Callaway or First Tennessee or Citibank regions or something big.
Yeah,
they typically go to.
Yeah. Which they're good at those residential mortgages.
Yeah,
offer good rates.
That's right.
Good service. They kind of built their.
Yeah, it's their forte. It's their thing that they do.
Right.
So it was only about 6 or 7 years ago I started really exploring, out of necessity, the local banks and how and the best way to use them. And today we're going to talk about just a little bit of how you can use these guys, why you use them. But the most popular question I get, especially from national investors, is why. So when somebody asks you, Dan, why do you use a local bank versus, I mean, it's a pretty simple answer, but why you use a local bank versus a huge national bank? What's something that you start off talking about?
Well, I mean, one thing that's kind of stuck out to me in talking to, you got all these people that are anxious to invest and, rip, rare, and rare to go, they found a property or looking at a property or learning how to, get started. And they've totally missed the getting that bank on board. And,
right.
You know what I mean?
Very important.
Very, very important. It's like, so why is that? And I think banking is a relationship business, and so to get them in the game after you've already put an offer in, or you don't even know what people lend you to, like how much or what's your capacity, what issues you have out there, and skeletons in the closet you got to clean up. So I mean, to me, local bank, they see you face to face. Not a knock on Regions, but Regions is going to send your information down to, I think, Birmingham. And it's like thumbs up, thumbs down.
That's what I tell people all the time. Hey, they're going to key your information in and click enter.
Yeah, it's just,
if a big green light shows up, you're good. If a big red light shows up,
done.
You're not.
You move on. Versus that local bank is going to get to know you, your history, who you are, your character. They're going to learn all that about you versus just a thumbs up, thumbs down. Input and model. Kind of like being a small college. Yeah. Versus, like Clemson, I was in a class with 200, students a lot of times in chemistry or something. Yeah. You're just a number. You're not a teacher to know you. No. So it's the same kind of concept with banking. I mean, I think if you want to go far, you got to find that partner that's going to, be a good relationship with you to help you go, as far as you can go or want to go.
So is there any, just for listeners, and this is maybe geared a little bit more towards newbie investors, but is there any difference in the programs from a big national bank versus a smaller bank?
Oh, for sure. Yeah. I mean, big banks are going to stick to that Fannie Mae, 30-year fixed product.
Right.
Local banks are going to be more, I mean, there are gives and takes. So you got to understand that piece of it. But, local banks are going to be more commercial notes. Kind of have a 5-year balloon, 7-year balloon, 3-year balloon. Just depends on the bank. So you got to understand that piece of it before, you dive into the local bank. So understand that pros and cons of that. So
I've always enjoyed getting to know some of the local bankers. I mean, they're very knowledgeable guys as it is. Yep. And then, to your point, when you first started off this, they want to know what your goals are. They want to know a little bit more about it. Regions or something. We keep banging on Regions, but
let's pick another one.
Yeah, any of these banks, First Tennessee or Wells Fargo. We can use Wells Fargo. It's a national one.
There you go.
So you go to Wells Fargo and
which they're one of the top 3, I think, lenders for home mortgages. I saw that in our Dallas conference I went to. Yeah, Quicken Loans. We can
have
Quicken.
Yeah,
Wells Fargo.
Going to some of these larger banks. they don't necessarily care what you're doing. Again, you're just a number, like you mentioned in college. You go to a local bank, they're way more curious on your goals and your strategies and how they can play in part of that. I even have guys go to local banks before they even buy the house, meaning if they're going to pay cash and refinance, even if it's a year down the road, they go and connect with that local bank to get that idea of what that's going to look like whenever they do decide to do it.
Well, that's just like in Jackson, before we ever bought the property management company or looking at buying properties. I mean, we've already met 3, 4, 5 bankers
up there.
Mm-hmm. We're already thinking and developing relationships, and they know the community. Jackson and Memphis. Those local banks know the community, and so they're going to refer you people. They're going to tell you who to watch out for, or you know what I mean. They're going to give you heads up on deals. There's all kinds of untangible. Does that make sense? Like stuff that just the fruit that comes out of that local relationship. So
they know everything about the community.
Right.
That's their job. Mm-hmm. The local banks know just about everything that's going on in the community. They know just about all the development projects that are going on. That they can lead you to other deals even. I mean, some of these guys are foreclosing on it, but understand, where you want to go, right? I mean, in our notes here is like, have a plan. Tell me what you mean. Like if you go to a bank and you and Douglas are, looking to borrow for some kind of project or whatever it may be, what kind of information do you take them?
Well, I mean, I think
outside of my tax returns and my the standard stuff. What's the information that you take to them?
Well, I think you're interviewing them while they're interviewing you, so keep that in mind. I think I would flip that for a second and just say, have them. Are they interested in the kind of stuff you're doing? Can they help you with fix and flip? Mm-hmm. Can they help you with buy and hold? Can they help you, with commercial or single family? There's banks out there that don't want to do single family right now.
Yeah.
So really, hey, nice to meet you, So, I mean, part of that would be stepping back and like talking to your friends, talking to mentors, talking to people in the industry and find out which banks are more investor friendly, both residential, fix and flip, buy and hold, fix and flip, commercial, whatever that avenue you're going, find that bank that likes that product. Because
you can see a bank like, and I've, we know of one with our friend Tully, but they sometimes banks get to where they don't want any more single family, or they don't want to carry any more notes on a multifamily or what residential or wherever it may be. They just because of their own bank strategy. So it's definitely important. To have multiple options.
Well, and for the listeners to understand, I mean, regulators drive a lot of that too. Mm-hmm. So there's 2 things that probably more than this, but the regulators look at your portfolio and say, wow, you're getting they kind of quote unquote dictate what percentage of product can be home mortgages and rental property and commercial and accounts receivable loans, kind of that commercial loan that helps people with paying their bills, when cash flow. I forgot the name of that, but the regulators do some of that, and then depend on the board of the bank.
Yeah.
The board of the bank, that's something I would be asking, like, who's on the board and what's their history? Yeah. Does that make sense? Like,
I hear Chuck from Guarantee Bank, we work with Chuck a lot, say, man, well, that's great. We'll take him to the board and see if we can't get him approved. And it's their whole thing.
Yeah. So the board, that's really who's at the end of, I mean, this is why we're going to lead into this, but you've got to have that avenue to get to the board to get you approved. Mm-hmm. So you can have the best credit in the world, but if it doesn't align with what they're doing or their history, or
doesn't matter.
There's a bank in town that got so burnt, they got so strong into the construction and rental property back in 2008 and through 12, they took such a bloodbath that bank will not even think about loaning to investors on rental property. You know what I mean? Like,
no.
Or if I don't know if they can quite say they won't, but they make it so
difficult.
Yeah.
Yeah, all the red tape that you got to go through.
Yeah, or they'll charge you 8% interest. You're like, wait a second, I thought market's 5%. Well, for this product, we're at 8%. That kind of thing.
Yeah, to run you. They can't legally tell you no.
That's right, but they can figure out a way to run you off.
That's exactly right.
But back to your original question, like, to me, one of the big things I always tell people is keep that W-2 as long as you can. Mm-hmm. I think that's key to a bank. They want to see a W-2.
Yeah, so you can make payment.
Versus, oh man, I just quit my job and I'm gonna do real estate full time.
Yeah, that's not a way to start.
That bank's probably gonna close that door pretty fast. I mean, unless you got a good nest egg liquidity, you saved up a ton of money in your stocks. 401k doesn't count. I don't know if people realize that. That's something we need to talk about, at some point. But
does not count as income. Even if you're taking withdrawals,
because you to me, a little bit doesn't make sense. I mean, I would discount it, but they don't really count that as liquid because I think you have to pay like a 15% penalty and then whatever your tax rate is. So say you have, $500,000, you're getting, lopped 75,000 off the top, 425 plus the tax rate. In today's dollars, you lose a third of it. So now you're at 350, which used to be 500. So, and it's a process. It's going to take you weeks and weeks and weeks to get that done. So anyway, I think, having that vision, who's your team, what is it you're trying to, where you're trying to go, be very specific, don't be going in there, I just want to invest in real estate,
I would try to be as detail oriented as you could. When you're going in and talking to those guys and getting all this information down, and communicate it over. I mean, that's the biggest thing is communication, so they can know where you're coming
and transparency,
from. And
honesty, all that plays into it. I mean, I think, do you want to do fix and flip in Colonial Acres, and you're going to spend 70 to 100,000 and spend 20 to 30, and that's going to be your wheelhouse, or are you going to buy 3 2s in Raleigh that are 50 to 60,000, rent for 800, 850? See how specific I'm getting?
I would get to the house if you have it already.
Don't just go in there saying, "Well, I'm gonna buy some houses."
That's right. I'm sure they get that a lot. Too.
I'm sure. Yeah, that for sure they do. But then let them know how you're going to get knowledge. How so I'm a FedEx guy, and I'm just giving an example.
Yeah.
And I go in there and hey, I just saw Than Merrill's podcast, or he was in Memphis and teaching about blah blah blah, and they're gonna look at you like, okay, you're ready to go, and you're like, but you got your plan, you got specifics where you're gonna try to do, you got hey, I'm reading this book, I'm listening to this podcast, I'm listening to this radio show, I'm going to classes, I think, and then I'd ask them, I'd flip it on them.
Mm-hmm.
Who do they recommend you meeting with?
That's the biggest. I was waiting for you to say that.
Yeah.
Who do you, Mr. Banker? Who's your ideal customer?
Yep.
What does that look like? And if they start reeling off a bunch of stuff that's not you, then you might have some things that you need to change in your business plan or strategy when you're coming to them. Dan, I want you to talk about the HELOC because I have an investor now that has the ability to do that, and we're talking about the strategies of going back and forth on it.
Mm-hmm.
He came in, he's a young guy, really impressive too. He came in, he's in the medical sales. He sells contact lenses to optometrists. So, looking to create, he's got room in his HELOC and he's got cash. Talk about that HELOC and why it's important, how you used it, and what some of the advantages are of using that to create, I guess, a portfolio of rentals.
Yeah, I mean, I think that was one of the strategies that after meeting with banks and kind of talking through what I was trying to do and where I'm trying to go, it was just evident that I needed to put a HELOC on my personal house.
Mm-hmm.
And because I didn't have the cash, I had, 401k type stuff, but, I just found one of the local banks that had a good, back then, I hate to even say this, but they did 100% of your equity as a home equity line. You're shaking your head like, who would do that?
Yeah, no one knows.
So like if the house was worth 200 and I owed 100, there's 100,000 in equity, right?
Yeah.
Well, they'd give you that 100.
That's insane.
So,
that is insane.
The day I closed that, I was sad, but because I sold my house, I had to restart over. Now it's 80 to 85 is kind of the norm. So on that same 100, now you'd get $80,000 line or $85,000 line. So there's some gap there to protect them.
Protect the bank a little bit.
Protect them, yeah. So that, to me, that's worked well for the BRRRR strategy. Buy, rehab, rent, refinance, repeat.
Mm-hmm.
Just do that over and over again. So, and then with that HELOC, you're hopefully that same bank or one of your other local banks, you're taking it back and refinancing.
Right. And so they want you to keep doing that over and over again.
Correct.
About how long from a time frame from the time you go to apply for a HELOC to the time you can actually use the money?
I mean, could be 2 weeks.
Could be a month.
Yeah, 2 weeks to a month. I mean, we're moving to a new house and getting a HELOC on that one. It's the first thing I started doing. I was like, and the appraiser called me. I got the bank paperwork on Tuesday. The appraiser called me Wednesday morning. I was like, whoa, I thought it was going to be a week before I even heard from you. And so I had to put them off, but because I wasn't quite ready, I wanted the house to be really totally finished before I just go get my appraisal. But that's how fast. I think there's work out there. The availability right now with the market kind of stalled out a little bit slower.
Yep.
They're more on top of it right now than ever before. But
the residential market is stalling out.
Yeah.
There's just no inventory, nothing to sell.
That's right.
So your appraiser calls you in one day?
The next morning.
That's a really strong indication.
And then I got the email, so I didn't call him back that day. I got busy. I was like, I'll just call him back tomorrow. By the next morning, I had an email from the bank. Hey, you can call the appraiser, get this thing going. I was like, man, this is service, But I think it's because of the
pretty true just tell of what's going on.
But I think the big thing that I learned early on, we talked about that selfless service, that go-giver book, just having that others mindset is, what does a bank need? And what, for our listeners to understand, they need deposits.
Yeah.
They need cash in their bank. And so, that would be my next kind of tidbit of advice is like, get your money out of Wells Fargo or wherever it is, the national banks. And I hate to do that to them, but you need to put your money where the people that are going to take care of you.
Yep.
So you scratch your back, I'll scratch mine, I'll scratch yours.
Yep.
They love deposits because there's a ratio. Say you have $100,000 in their bank, however that money's made up in a CD or whatever, they can loan that out tenfold by borrowing from the Fed.
Yep.
So that 100,000 turns into $1 million versus where they can loan. Does that make sense?
Yeah.
So that's why they need deposits so bad. There's ratios, and this is way above my pay grade. I'd know enough to
get myself in trouble,
but I know that having deposits helps them loan more, which if they can loan more, that's good for you and me. It's good for the economy. It's good for the bank's, profitability all the way around. So
what kind of communication do you have, with your banks? I mean, is it something, because, I ask you this specifically because I know you guys work with several banks, but like how often do you communicate with these guys? Are you keeping in touch weekly, daily?
There's probably not a day goes by I'm not talking or emailing with some bank that we deal with.
How many do you guys have? You have a half a dozen, you have 6?
Probably 6. I mean, at some point we had probably 15 plus.
Yeah.
It's whittled down over the years, and, some banks have come and gone. I mean, there's certain banks that don't want to touch investment property, and they were jacking up the rates to get it out. And so we're like, okay, so as soon as we could refinance, we moved. But you definitely want more than one. That's something I'll make sure we understand with, portray that or parlay that to our investors. I mean, you don't want more. You don't want just one bank.
You'll only be able to go so far.
Right. And then, I mean, just like you mentioned Tully, I mean, his bank has cooled off. So you have a Bank of Jackson that's loaned, 100 loans so far this year on investment property. At some point, they're going to say, we got to hold off. So if you're in that group with that 100, and all of a sudden they cool off, if you want to keep going, you got to now start over with a new relationship and just kind of come in cold. But if you have 2 or 3 going at one time, I used to do round robin with my burst strategy and the HELOC. I'd go bank 1 this month, bank 2 this month, bank 3 this month, bank 4 this month, back around to bank 1 on the 5th month. And they're like, man, we hadn't seen you in a while. What's going on?
And they're interested and they want to know what you're doing.
Yeah.
That's right.
So I didn't just slam that bank with 5 deals in 5 months. I came and it was 2 deals in 5 or 6 months. So to them, that felt better as well from not putting too much pressure on them. So the more banks that you can have, the better. I mean, I just can't stress that enough. I mean, so
it's just good relationships. It's good to, have, I like it because it's different opinions.
Oh, different opinions. They have different relationships.
Yeah.
They're going to tell you who to stay away from in town, and they're, the softest way they can tell you that.
Yeah.
So there's definitely so many intangibles that we could go on and on about why that local bank and having multiple relationships is important.
Talking about staying in touch, one of the questions that you've mentioned asking was, how can you help the bank?
Mm-hmm.
Tell me what you mean by that. I mean, what would a bank look at us for as far as help?
So we talked about deposits. That's probably number one. And then one of my questions always is like, how can I help you? What kind of referrals do you need?
Mm-hmm.
And if they're not needing more investor, say their cup is full of, there's a handful of you that are in that bank with, doing investment property loans or fix and flip, whatever that product is. They might say, man, I could really use some commercial loans of people that own businesses and need a line of credit. Oh, okay. And so now they're top of mind. And, when you're out there in the world and meeting people and having lunches and, they're talking about their business. Oh, you got a good line of credit, and it kind of parlays the conversation. Oh, let me hook you up with such and such bank in Jackson or Memphis or whatever.
Yeah.
Does that make sense?
Yeah.
Like,
you're helping them. You're scratching their back. Yeah, they're scratching yours.
They're going to say, where'd you hear about me? And they're going to say, well, Dan told me about you at lunch the other day and said y'all might want, my business. Now, I would tell you that you should at least somewhat vet that person.
Yeah.
You know what I mean? Don't just
send them anybody.
Don't send them anybody. Kind of know, kind of that character, how long they've been in business. Do they sound like they know what they're talking about?
Mm-hmm.
Is there meat behind what they're talking about?
Mm-hmm.
Versus just, oh, I met a guy, and you might do well with his loan, and he's investing in, putting a store, in the middle of Orange Mountain, in the middle of a neighborhood. I mean, that just,
you can't find him.
Yeah, that doesn't make sense. So just make sure that, and then, or multifamily is another one. There's several banks that we deal with that, man, send me every commercial. If you get an office building or a 20-unit apartment, we want that all day long. So when you hear that, your eyes, your ears perk up, and you try to, help that bank win. So that's kind of the key piece I think is missing. Everybody's, not everybody. See, I use an absolute, so I got to stop myself. I got to watch myself. Most of us get, and myself included, you get into your lane. You're trying to win every day for yourself. So you really have to be intentional. If that's something I could really push to the listeners, be intentional and listen to what is out there and what people are saying.
I agree.
And make that connection. Take that moment to make that connection. Douglas, my business partner, as you know, that's like his gift.
Yeah.
He's
really good at putting people together.
Alyssa, he loves having Alyssa on board because anytime he hears somebody that might need a retail sale, hey, you mind if I hook you up with Alyssa?
He loves that.
He loves that. Or the banks saying they need multifamily. We meet somebody that's about to buy a multifamily. Hey, let me introduce you to Chuck or whoever.
That is a gift he's got. It's putting people together.
So that's something to keep in mind. Yeah.
Things to understand. Your banker has to become your advocate. This is true. I mean, they've really got to believe in your story. They've really got to believe in your company and your strategy. Mm-hmm. Because there will be a time where you're going, if you stick with a banking partner long enough, that no matter how strong you are from a cash flow, from a business transaction and cash flow standpoint, to your own personal income and savings, no matter how, unless you're just a multi-millionaire and you haven't borrowed any other dollars, you're going to reach a point to where the banker that you're dealing with has got to sell for you. He has got to go on stage,
to the board,
and
his colleagues.
Yes. No, you might be an easy pass through for the first 10 houses or 11 or 12 or 20, but at some point, no matter how big you are, it might be after 3 houses, if that's your financial situation, it might be after 30. But at some point, that banker's got to get up on, essentially on the stage and talk about you as a borrower and why their bank needs to lend you more money.
Yeah, they have to sell you to the bank.
Yeah,
quote unquote. They're your biggest advocate. They got to go out there and just, hey man, I've learned this guy's financials. I mean, they're gonna look at the whole package. They put somebody. I mean, as you get bigger, it gets much more complicated. You go from a 1-pager to a 10-page report on you, but they're going to take a 1-pager, and every board member is going to see this guy's got this liquidity, this guy's got this, he wants to buy this asset that's going to have a debt service ratio of 1.4, whatever that number, and I think we should do it because of these 3 things. And a lot of that's going to be your character, and this is what he's done so far. This is what his career's been. He's been in business, blah blah blah, and built this. He's I talk about this in the inner city a lot when trying to get people that, you've heard me, I'll tangent for a second, like 2 felonies, one guy sitting on the porch blaming the world and, pointing fingers. The other one's out there,
cutting yards,
getting
something.
a GED, getting mentored, coaching others, helping others. The one's creating a story and is getting around a lot more positive influence and, versus the guy sitting on the porch blaming the world.
It's me.
So this is kind of the same concept. What kind of story are you creating? Are you just waiting for the money to come to you and, the get rich quick concept, the mindset? Are you really, really, really going to roll up your sleeves and show the bank that,
that you're going to do this?
And so if you haven't rolled up your sleeves up to that point, that's going to be a hard sell for that bank to say, well, man, he's got a good job.
But he isn't ready.
And
believe me, they'll notice.
Oh, for sure.
Because they talk to people that want to borrow money all the time. This isn't their first time to do this. They're going to know whether you're prepared or not.
They're going to ask, and they're going to interview you. They're going to ask who you know, who you hang out with. Mm-hmm. And, you're only as good as your 5 people you surround yourself with, as they say. So,
I also wonder if banks have started going to social media yet.
Oh, I bet. Yeah, for sure.
Mm-hmm.
For sure.
Just to see if they can find you.
I think one thing that really stuck out to me as I was kind of putting this together Sunday was that book, Speed of Trust. Stephen Covey wrote it. And, think of trust. You initially think of like lying.
Yeah.
Or, telling the truth versus lying, that kind of thing. But it's really doing what you say when you say you're going to do it. And so, right, wrong, or indifferent, man, I mean, the banks, we respond within probably minutes, if not 2 hours. We don't let the sun does not go down without a reply to the bank to let them know we're working on something. And I can't tell me, man, that was quick. Hey, man, thanks so much. That was just what I needed. So something to that bank, But the worst thing you can do is I'll get back to you in the next few days.
Nothing, and
then they have to follow up with you. You know what I mean?
Well, then it shows they're not that important.
Yeah, it just shows you're not serious.
Yeah.
You know what I mean? That's an interview. I don't want people to realize that. That's a huge deal. Doing what you say when you say you're going to do it. So if you're busy and you're traveling or whatever, and it's going to take you till Saturday and it's Monday, say it. Tell them. Yeah. Say, hey, look, I'm traveling all week. I don't have access to my files, but I'll have it to you by the end of the day on Saturday. The banks will be fine. But don't go to Saturday and say, man, I'm just tired. I don't feel like doing this. Mm-hmm. Knock it out.
Yeah.
Because guess what? They put on their calendar.
Oh, they're waiting on
Monday.
Oh, I promise.
And so when Monday comes around and they got this file they're supposed to submit and get going for you, and you haven't submitted it, you just create a little doubt and a little more doubt. So.
Yeah. No, I agree. You've started your banking relationship now. Now what, Dan? I mean, we're going to talk a little bit more next week. Of credit and
your personal financial statement.
Yeah.
The 5 C's of credit. We can get into that. So the banking relationship to me is worth spending a lot of time on because that's the essence. That's one of your big building blocks. Which another one down the road is probably property management. That's a big one that people always talk about. If you don't have a good property manager, you might as well not get started.
A good show or even a good series might be to break all these down. Property, we just did banker, property managers, your real estate agent, insurance providers, accountants, contractors.
Yeah, let's do that. We'll do that next couple of weeks. Just each like insurance. What do you look for and why?
Yeah,
and why that's so important. And the attorney. I saw somebody posting this morning about attorney, and it's driving me crazy because a lot of them, advise people to get the cheapest. They don't say it in there, but they say, "Go use this guy."
He's only $100.
$100. It's like, nah, man.
You're gonna get a $100 closing too.
That's right.
Yeah, I fully believe that. Tell me some of your bank stories, Dan. I know we've got a few minutes, unless there's something else you wanted to hit.
Well, I think we'd answer that one that came on the asking about international and out of state.
Mm-hmm.
Yeah, real quick. I think, out of state, we both know we got bankers that will help out of state. Now, they won't loan from Memphis to something in California, but they'll help somebody from California buy in Memphis.
So we had somebody on the show's Facebook page. You can go there and post a question on there. We had somebody post the question, will these local banks that we're talking about loan to national and international investors?
Mm-hmm.
And our answer is yes, that they will. But what they won't do, and what you just said, if you're in California and you want to talk to a bank here, the local banks here are not going to loan on a property in California. They'll loan on a property here in Memphis. My international investors, I will tell you, it's very difficult.
Yeah, I mean, unfortunately, I think I've known of one that will do it, and I've talked to a large mortgage guy out of Seattle that will do it, has a product, but most of the time they're going to be stuck, for lack of better words, in hard money.
Yeah.
Somewhere between 8 to 12%.
Yeah.
And I think, at some point I believe they could get that converted to, a local bank
At some point.
with that relationship of who you're working with. Now, you can't just go rogue on your own. You're going to have to, somebody's going to have an end that's going to be your advocate to that bank, if that makes sense. So,
You don't have to have
tougher
some
on
rental
international
history. I think you're going to have some business history here.
Yeah, loan to values are going to be a big deal. Who's managing it's going to be a big deal, because the last thing that they want to see happen, which they saw happen in 2008, with there's not many banks that want to loan to somebody that just wants to buy 2 or 3 houses and manage themselves.
Yeah.
They've changed that. They want to know who's managing their property, because what happened is those guys would leave.
Yeah, gone.
Versus if they did leave and it's under property management, at least that asset's being watched and the tenant's being watched and they're securing the house, the utilities being monitored, that kind of stuff. So,
but it's
anyway.
the root of it is, and I've had, I won't tell you the banker that's on me, but I've had him say it's the root of the reason why is, well, you can just, it's simple. I mean, you just leave.
Yeah.
They just can't go get you. I mean, where can they come after you and get it? I mean, eventually they can foreclose on it, and with your lack of communication, not even being here, but they can't track you down. They can't come after you to try to make you pay or to make it an easy foreclosure or anything like that. So the logistics of recouping a loss for them is what drives it the most, no matter how qualified that you are. Tell me, before we go, we got a few minutes left. Tell me, give me a good banking story.
I had a few that came to mind. This is where that whole relationship kicks in, of just, they're not just your lender.
Your business partner.
They're your business partner. I mean,
Right.
I remember we were looking at an apartment in Berkeley years ago. Got choked up for some reason. Something you said, I guess.
Yeah.
I'm just kidding. And he drove it on his own, called me afterwards. He's like, man, I just don't know if that's a good fit for you right now.
The banker said that?
Yeah.
Mm-hmm.
And so,
How far along were you in your investing?
several years.
Okay.
Yeah, several years. Wasn't just starting.
Yeah.
So he took it upon himself, go drive the asset, call me, let me know. And I appreciated that. Like, I could have been stubborn and said, I'm going to buy that anyway.
Yeah. But you listened.
I listened and
Did not buy it.
Yeah, just backed off and went to the next deal, just because he didn't feel comfortable with it for several reasons. And so he's not going to be able to sell that to his board.
Mm-hmm.
You know what I mean? Like, that just wouldn't work.
No matter how, and I tell you what, it probably gave you some brownie points, so to speak, with him for taking his advice.
Oh, for
and
sure.
moving on to the
Yeah,
next
that's a great
thing,
point.
and not being so bullheaded, saying, "No, I'm going to plow through this, Mr. Banker. What do you
Right.
know?"
Which, my personality would tend to go to that latter.
Yeah,
Push through it. I'm gonna go to another bank, and we hear that a lot. I think we hear people like, "Well, I'm going to do it anyway." It's like, man, you need to listen to some of the experts. You know what I mean? Like, there's.
I will tell you, one of the key things in investing, and it's making me think right now, is you got to be open eared.
Yes,
humble. You cannot be a
Yes.
successful investor out there. And
well, the numbers work.
I'm doing it.
Doing it.
Yeah.
That's going to get you in trouble. I think. Another one just early on. Somebody. I got the bankers come. I came, picked them up, and showed them to some of the rehabs we were working on, and so they could see the quality of work. We're actually refinishing floors and painting and blinds and smoke detectors and really protecting that asset. So that care. I mean, to this day, they remember walking that property, and that was over 10 years ago.
Yeah.
They remember. And we're still
still banking
with them.
That's what we mean by long-term relationships with these banks, letting you know who you are, what you're doing, what your goals are that you're taking in, into. So we're going to post the show right after we're finished here today, and it'll be on the show's Facebook page. So I encourage you guys to go listen to this show and go back and listen to the others. We do have some exciting things coming up in the next few weeks. We're going to bring you some of these radio topics and some of these things I don't think we have off for a good while now. Yeah. So we should be here every Tuesday live giving you some more information. You guys stay tuned. Go to the show's Facebook page, The Memphis Real Estate Hour. You'll be able to check everything out there. Dan, taking us out of the show today, like we do every day, is going to be a little widespread panic.
All right.
So just so you feel a little bit more comfortable, whatever that is.
Yeah.
All right, guys, I appreciate you listening to the Memphis Real Estate Hour. There we go. See, Dan? Does this just sound good to you?
Yeah.
Makes you feel, but it's just good, feel good music today. All right. Thank you guys for listening. We'll be back next Tuesday for the Memphis Real Estate Hour. See you then.
I swear I can't get enough.